Hello and welcome to our latest urgent market update video for Monday, the 23rd of October. Now, last week we were able to book in just over 15% profit in our live trading. However, we wanted to break down exactly how and why we were able to see these types of returns. So let's get into it and we'll break it down for you in a little bit more detail. Okay, so thank you very much for joining us for this short video. It's slightly unusual, or it has a slightly different focus as such, because we want to explain the process we went through last week and what our approach is, sort of more broadly speaking, and try to break down. There's very, very important reasons behind our trading strategy and approach, which allow us to be at least open to achieving big returns. We know all too well it's very, very easy for traders to lose money, but it's very difficult for traders to gain money consistently. So we want to just take a little bit of a time out, look at what we did last week, and as a result, we'll explain and break down exactly how we were able to generate these types of returns, to just sort of give you a little bit of insight in terms of perhaps your own trading strategy, how you might be able to adapt and improve perhaps in some of these areas. So let's get straight into it then. We'll start with our risk warning. Just take a brief moment to familiarize yourself with our risk warning currently up on screen. I'll pause the video if you need to. Right, okay, so let's just begin to break this down. So those of you that join us live, of course, you'll be fully aware that we conduct a trade plan session live every single morning from 7:30 a.m. That's Monday to Friday. So in last week's trade plan session, we were able to conduct our analysis on a market fundamental basis, on a risk sentiment basis, and we know there's lots happening in these particular markets at the minute, and also on a technical analysis basis as well. So we do want to understand why markets move. We want to see if there's an appetite for risk, and we want to see if the technical charts kind of support trades in those directions. And when you do, you get some of the biggest trades you could possibly imagine. And to just take you through our directional bias more broadly. And you can see the dates on each of these little trade plan sessions, and these are the information that we kind of post. And it's very much around this risk-off market conditions. So what are the market fundamentals telling us? Well, we're seeing some reasons to be really quite concerned about these markets. And it's broadly this idea, and you'll see it in some of these, that we are of this risk-off market condition, and it's largely due to higher than expected or sticky US inflation numbers in the US. And that's leading to this hawkish Fed narrative, which is an important feature as well. So because of all of this and our understanding of these market fundamentals, we're able to sort of position ourselves. Plus, we want to see these equity markets rolling over to the downside, which is exactly what we're able to see. And from a technical perspective, we're looking for a bit of a channel being created, lower highs and lower lows. And once we get a cohesive or a coherent trade plan based upon our analysis, that allows us to create a bit of a trading edge and be ahead of these markets and position ourselves early. And that's what we were able to do on this occasion. So what I want to draw your attention to is every single day we had this risk-off market condition. We because of our analysis, we were able to look for indice weakness, both US and European, and also our analysis was pointing very clearly towards further dollar strength. And you look at what's going on in these bond markets as well. All the indications were telling us that we were likely to get some decent moves to the downside. And we just want to stress the importance of planning your trades. because what our trade plan allowed us to do last week is to exclude buying opportunities. And when I show you the charts now, in fact, I might bring them in at this particular stage, because I'll go through the actual trades we were able to get into and how we were able to position them. So we were able to benefit from this move. And if I take you back 2 weeks, so this is last week's trading, these 5 trading days. And if you go back just the week before, what we experienced was some very, very significant resilient price action off the back of quite bearish news. And when that happens, that sends us some really, really important signals. It means this is a corrective move in the market. And when these markets have finished pulling back, we're going to look to execute our sell trades, because our analysis is very, very bearish. And we know we can get periods in these markets where you can have really bearish fundamentals and you can have really positive price action. And this is largely due to this, the fact that the markets are now beginning to realize that the Fed are actually raising rates, and they're going to keep those rates higher for longer. So 2 weeks ago, we were expecting some further downside, and we got this, we started to see a very significant gap to the upside and a bit of a strong rally. But then this market pulled back into resistance, and we said that at whatever point this market pulls back, we're going to be looking to pull the trigger and start getting into these trades. And that's what we were able to do. Now, still, if we go back to the beginning of last week, we still had some sort of some strength kick in. And this is the power of you having your trading strategy. And if you're very comfortable with your exposure, i.e. you understand where you're placing your risk, where you're placing your stop losses, and you have control over your exposure, it can make you, I suppose, still feel relatively confident about the trade, even though Monday of last week, we started to see some significant buying creeping in. So we started to see that type of move. So this is a good example, being the S&P 500. It would kind of give you a little bit of an overall view. However, our overall bias was absolutely to the downside, and we're able to benefit on this type of move, having able to get in at these highs up here and being able to capitalize on a very, very significant period of sustained selling in this market. And again, it's very much based off our ability to plan the trades. So while there was some operators in this market that were looking for this little short-term buy trade, which we know exists, it's the secondary trend. The overall trend is very much to the downside. So you do get periods of buying. You can decide to trade those from a short-term perspective, or you can allow that pullback to develop and then look to execute your primary trend trade, which is very much to the downside. But it wasn't all plain sailing. There was periods within this which were a little bit on the concerning side. There was gaps involved. So it's really about developing a trade plan based on the information, the important factors for these markets. And it's having enough faith in your trading strategy and methodology to be able to identify where the key levels are in terms of entry and stop loss. It's calculating your trade size properly and then allowing and giving the trade time to develop. So this is the concept of letting our winners run, is the reason why we're able to achieve significant returns in a relatively short period of time. So this was our trade plan. As you can see, it was based around, you know, having that directional bias and that conviction in our understanding in terms of what's happening from a fundamental perspective, also what's happening as far as risk is concerned, and then doing that technical analysis and give us a very clear opportunity in what we're looking to do. And in that case, with the S&P 500, we were allowing the pullback in order to start selling at a higher price. And that's the beauty of it. So to break down in a little bit more detail exactly kind of what we were trading last week, we were able to achieve just marginally over 15% profit. And that, if you accumulate the PIP profit, we were able to secure 1,414 PIP profit. So depending on how much capital you have available, we prefer to focus on percentages because it's more relative to each and every one of our traders. So we were very much in this risk-off trade. So we were looking at the S&P to the downside. We were looking at the NASDAQ as well, looking at those tech stocks. These aren't all winning trades. We also had the DAX to the downside. And then we were able to trade the New Zealand dollar, the euro dollar, and the pound dollar. So we had that risk-off market condition, indices down, dollar up. Now, they weren't all profitable trades like euro dollar. We were virtually breaking even. We took a 4 pip loss on that particular trade. But elsewhere, in the S&P 500, we were able to gain 107 points in that particular trade. And we post all these trade details live to our traders every day. And those of you that were able to join us live would have seen us execute our trade plan, pretty well over the last week. In the NASDAQ, we booked in 390 point gain in that one particular trade. The DAX, sizable performance, 711 point gain in the DAX, a really, really profitable trade for us. If you look at the pound dollar, 125 pip gain, and also the New Zealand dollar as well. 85 pips. And like I said, the euro dollar not really performing, which was a bit of a surprise. But we were able to secure this type of return off the back of a trade plan, which, to be fair, it took 6 to 7 trading days to be able to sort of achieve these types of returns. Now, you won't get this opportunity, on a regular basis. This is it was a really good, high quality trade idea, trade setup, and we're able to execute it brilliantly well. But that's what we try to do if we can. Get these opportunities, let those winners run, and really be able to book in very significant returns. So this is what trading is for us. It's being able to identify those times when you get high correlation between market fundamentals, which with our analysis with conflict in not just Ukraine, but in Israel, the fact that higher rates for longer in the US, we have issues with slightly higher than expected inflation. You've got the bond yields, we've got the 10-year now up at sort of 5%. These are all sort of quite significant warning signs for some of these markets, and we're able to identify that type of analysis very, very early on. We can see that there's this caution now about risk. Bullish traders are not so bullish right now, and we're capitalizing on that sort of psychological shift in these markets. And then, of course, our technical understanding just allows us to obviously technically get in and out of those markets with a really sound stop loss, a decent size in the trade, and we're able to generate these kinds of profits and returns. So hopefully that makes a little bit of sense. Like I said, this trading session is a little bit, this particular urgent market update video is slightly different in nature because we wanted to try to explain and break down, for those of you that perhaps don't join us every day, how do we get to grips with these markets? How are we able to see the returns that we're on occasion likely to see? And this is just breaking that down in a little bit more detail for you. So on a normal video, we would have our trading opportunities that that lie ahead. And at the moment, we're actually in a bit of a wait and see mode because we booked in profits towards the end of last week. Now we start to see a flush trade to the downside and prices beginning to reverse. So there is the potential for a little bit of a reversal signal across many of these markets, perhaps the euro dollar, pound dollar, looking to bounce off their lows. We might see a bit of upside there with the US indices potentially turning around, and we might get a short-term secondary trend trading opportunity to perhaps get into a short-term buy. But we do want to refer back to our trade plan. We'll have a look at these markets again tomorrow morning and see if we can actually capitalize on looking for our next series of high probability trading opportunities. And who knows, it wouldn't be beyond the realms of possibility to be able to achieve very significant returns yet again. Okay, so on that note, guys, thank you very much for joining us. If you do have any questions, about anything trading related, do feel free to email us if you wish at support@thelivetraderoom.com, and we'd be delighted to get back to you as soon as we possibly can. So on that note, thanks very much for joining us for this slightly unusual urgent market update video. We will be, do stay tuned, and we will keep you updated on the next kind of market move, so to speak. And just to let you know, to reaffirm, we do broadcast a live trade session every single day from 7:30 a.m. every morning. And we trade the markets live, fully live and interactive from 8 a.m. for the European session. We're back again at lunchtime, 12:45, and you can tune in. We do trade these markets live for an hour or two in each of these sessions, and you can see what we look for and how we look to trade it, and how we position ourselves and everything trading related we discuss during the live broadcast. So it's a really good opportunity if you're trying to find your way in these markets and you're looking for a little bit of guidance. We can certainly help you. So for more information, just go to thelivetraderoom.com and we'll be happy to answer any questions you have there. So from everyone here at the Live Trade Room, take care and speak to you soon. See you next time. Bye for now.